Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Tuesday, December 6, 2022. It is 2:59 Eastern Time as I'm starting the video, so an hour to go in the trading session. And I figured I'd try to do another quick one like I did this morning. Got a video under 10 minutes, and we'll try to do that again, just a quick update. So just to kind of recap what I've been watching recently and some of my thoughts on the market. Like I said, I've thrown out some short-term trade ideas, but I've cautioned you this is usually when I take off, and my job is to give you trade ideas, and the short-term ones, at least today's, didn't pan out. That QQQ long trade, but it also would have took you out right after if you took the tight stop below the triangle I'm talking about. Of course, this 10-minute triangle here. There it was. Instead of bouncing off the trend line, it broke, and you can see it was a pretty well-defined. Even better, more importantly, that was a trend line on the daily chart as well that we took out today. And so that was the tight stop would have been hit there, and then I gave, I think, a little more liberal stop for swing traders who might be holding out a little bit more there. That one was also taken out. But now here's where we're at. Well, since I'm on the short-term chart, let me just talk about this real quick. Hour to go. We do have on the 5-minute chart now, we have some, it's not very big, but it doesn't take a lot. It's steep divergence. You have a steep drop in prices here with higher lows in the indicators. That's positive divergence. And as I mentioned earlier, active traders want to keep an eye on this. There's a trend line as well. Here, let me just draw it. This other line right here, I was trying to measure how much we'd have to come back. We'd probably have to rally a good 2.5% or more to get back onto the trend line and have today's breakouts be false breakouts. That's what I was talking about earlier. It's been my experience the month of December. And you have that big FOMC meeting coming up next Wednesday. The chances of whipsaws are increased. So I'm just going to start out here on the short-term charts and go there. So you do have that divergence there, and that could set a late-stage rally. And if you look at that's a 10-minute chart. Yep. If you look at the 15-minute chart, we go out a little farther, you can see that we have a support zone. You had this support right here. Triple lows right there. You had a couple spikes down through that level and some reactions on it, and so we hit the bottom of that zone, and now we've recovered it. So if I take this line down here, we could have some divergence right now out on this 15-minute time frame, at least here on the RSI. So that could set the stage for a bounce back to where I'm going to give you one level that's not shown on this chart that could do the trick for short-term traders, and that would be about 11,646 or so. And then you have the next resistance up here at about 11,744. And then, of course, you still have that downtrend line. That's that same one I showed you this morning in the triangle, except that triangle would have looked, if I had it here on the 15-minute chart, that's what it would have looked like right there. So these are all potential bounce targets. Now, the point of this video, what I wanted to show you, now I'm going to loop back, before I go back to the daily charts, I'm going to show you ES real quick, also at or around support. Give me 1 second. Gotta find it here. There it is. That's what it looks like on an hourly chart. It's just what happened to click over to ES. I had it on a 60-minute chart. There's the primary uptrend line, and that's the same one on the daily. That's been taken out, clearly taken out. And so to make it a false breakdown, we'd have to come back on or above the trend line. There's also a downtrend line right there, a little minor one. Remember, we're coming off the divergent highs. So the move down clearly indicated I expected a downward bias heading into the FOMC meeting. That's what we've had so far. And you can see that, remember that big pop we had the other day right here that seemed like nothing but outright bullish? Well, all that's been faded and then some. So that's pretty bearish, and that's typical of a bear market. I commented on it that day that not only did that rally, you can see it here on the 5-minute chart, as impressive as it may have seemed, and somebody on the site was citing the record moves. It's one of the top 20 or whatever in the NASDAQ, and I said, look, there's a big difference if you have a big move like that on volume, big impulsive breakout above a well-defined resistance level, or just a random one. In fact, all that pop the other day did was take us into resistance on QQQ. This is just a 5-minute chart showing you, but I wanted to show you that all that rally has now been faded, and look, almost exactly, except yeah, it is exactly a fade on QQQ. Let me put a horizontal line right there. Yeah, this is pretty much from the point where it started. And now we've had a fade. And this is what I talked about. If you zoom back, we're on a 5-minute chart here. This is the trading range we've been in. This is what I've been talking about. So these mean reversion trades, this is what the market's doing and will probably continue to do over the next week, bounce around. Now, okay, that's near-term stuff, but I did want to point it out. It's at support. And so, and you also have some divergence there as well, and that could set the stage for a bigger rally. So let's watch it. But as of right now, with an hour to go, we do have breakdowns. Remember, this is the primary uptrend line on QQQ. That's a solid red candle. That candle has not been finalized yet. It'll be finalized at 4 p.m., so let's see what happens. We also hit that the 280 support. It's the same trading range I just highlighted on the shorter term chart. So that's it. We're bouncing around there. We do have a breakdown that's technically significant. This red box right here was the what I called bear market rally bounce target zone, my likely target zone, where I mentioned starting to personally scale back into swing and trend short positions. And should we continue higher into it up to the top, I will continue to scale in at that point, and not planning to add above there. So that's if we bounce up, I'll do it. And if we continue, if this sell signal sticks and we continue lower, I'll continue to scale in, but I really don't want to go too heavy until the Fed is out of the way next Wednesday. So that's QQQ. Again, watch and see if these sell signals stick or if they prove to be whipsaws. If they do, if we happen to rally up, let's say, for example, on SPY, I'm going to move this trend line a little closer here where it fits better. I don't know why that won't stick. Sometimes these lines kind of snap around. Need to activate the end of it right there. There we go. So the S&P 500 would have to, right there is where I want it. We'd have to rally from where we're at right now about another close to, well, if we did a 2% rally into the close, that would park us back on there, and it would give us a sign of non-confirmation. A breakdown, you have to have a solid, clear close below the trend lines, and we'll watch QQQ as well. So let's just see what happens today. If anything big happens, well, I don't, you already know what to look for. If we close on or above the trend lines on both SPY and QQQ, or even one of them, then the breakdown's in question. It may be a whipsaw. Now the takeaway here is if that happens, and then we can build back on those gains tomorrow, you're going to see a big short covering rally, because I can tell you this was a clear breakdown. If it wasn't for the two things I mentioned before, the FOMC meeting next week and December being full of whipsaws, I'd be heavy short on this. But I'm sticking to my plan. I told you, I don't actively trade that much in the month of December. I'm throw out trade ideas. You take them if you want, pass on them if you don't want them. But as far as swing and trend trading goes, I'm sticking to my plan. And this is a check mark right now, but I put a big question mark by today's check mark. In other words, it's a breakdown, but we also hit support there. I showed you some divergence. The other things I'm noting, we're getting more, and let's see how today closes. Remember, in recent weeks, I've been talking about the bearish PPO crossovers, how well they work as trend indicators, how we've had those on some, but not all of the sectors. We've gotten more recently, including today, and more importantly, both the SPY, the S&P 500, and QQQ, as of this moment, the histograms are red, meaning we've had a crossover. It was deeper before on QQQ because we're bouncing off the lows a little bit here, off that 280 support. And so it's kind of questionable, but if we close here or lower, we're at 281.50 right now, it just ticked 281.50, then you have a bearish PPO crossover on QQQ as well as SPY. If we rally up, then it may be another whipsaw. I believe a couple weeks back I was pointing out here, intraday it looked like we might get it, only to reverse before the close. And so we never had a confirming sell signal. It's not the be-all end-all, but again, the technicals have been shifting, and the bearish case gets stronger with each sector in the S&P 500 that makes a bearish PPO crossover on the daily, especially with the sectors making that crossover. So like I said before, it appeared imminent. So I haven't waffled on where I think we're going. It's still a matter of is it going to happen with a little more upside before then or not. And there's a good chance, as I said a few days ago, that this was the end of the bear market rally last Thursday. And we'll see. And today makes that chance even higher. And what would reduce the chance? You know, the odds, I always say it's like Vegas, you know, horse betting. When you're watching the odds on the board before the bets are closed, the odds are changing as the bets are coming in. And the same thing works with the stock market. If we get a recovery back above those levels, then I'm going to say the odds are going to be diminished or decreased that was. It still could be, but we'll see. Again, the end of the bear market rally. So that's it. I wanted to point out the bearish PPO crossovers, the breakdowns, and also on VIX. The VIX, I've been watching this one all the way since back here. Somewhere in here, I first highlighted this trend line and said, watch that, because a breakout of that will be your next sell signal in the market. We had an intraday break there, but it never stuck. That candle right there, we popped it intraday. The market was going down, but then the market had a big turnaround, and you can see that the daily candle did not print above the trend line. Today, we're above it as I do this video right now with another 50 minutes to go. And so these are the things I watch. Now, you can see I've added a resistance level here, 2254. We're a little bit below that. So again, maybe we do have a big move down before the FOMC meeting. That's certainly possible. But again, I'm leaning against that. Nothing big happening until then. But I can tell you if the VIX can take out 2254 with conviction, then that's going to be bullish. And that would also coincide with more downside in the markets, which help to solidify today's breakdowns or sell signals. So that's it. Let's see how today closes. We'll go from there. If we don't, if we close on or just below the trend lines, I mean, you could take them on face value. A breakdown's a breakdown. And then if it gets undone, it gets undone. So if you're active trading, for example, you may want to cover shorts or go long on a recovery of the trend lines, both on SPY and QQQ, or you can look at ES and NQ. I'll get to that in a second. There's SPY. NQ right there. Let me go to a 60-minute chart, show you that. See, there's your trend line. It's nice and clean. And I'm going to zoom in a little bit for you. And you have a similar one I just showed you a minute ago on ES, I believe. There's the uptrend line on NQ, NASDAQ 100 futures. And there's a clear breakdown. So it would have to be a pretty good reversal to recover that. So as of now, again, breakdowns are pretty solid, and until and unless they get undone, then that's additional bearish developments right there. And if you're a swinger trend trader, you could add to some positions today. Again, like I said, it's up to you. I just wouldn't go crazy short into the Fed meeting, because anything can happen. All right, I'm going to stick to my word and wrap it up here. Keep it short. We're right at the 13-minute mark. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.